let's take the euro US dollar. So we have a stop loss of around 70 pips. Let's enlarge just for the moment here to be sure. No, the trend is still intact. It begins to change its slope in the white line, perhaps in the green line. We have divergence. It may be interesting. Do you see them now, Chris? Okay, here we go. We can go for the MTM, so sell with the euro yen. We have the green line beginning to change its slope, the white line too. The stop loss is around 20 pips. So now let's wait and see. We have a nice strength in the downside momentum, and the price can reach the home base. So, and because we have placed enough to the home base, I am tempted to take that opportunity. Is it better that way, Chris? Okay, the price is going downside. So the pivot level, the version I have still have some overreaction sometimes. So I need sometimes to refresh it. This happens mainly with the CRB chart. Let's do that too with the euro US dollar. So in this case, I take only one trade. Once a trade is opened, I focus only on that one trade. So what I will do is I will close the MTM here for the euro US dollar. I will remove here the expert advisor. And here in the control panel, we can show the global variables should we have several trades open, but it is not the case, so I will only show the present trade. So now at the close of that blue candle, we have a potential MX, okay, because of that M, and you see the price has reached the home base. The price has not hit my exit level, so the price has not followed through, so we stay in the trade. The price, we have already banked 59.60 pips. We can, of course, take the opportunity for of that movement to tighten somewhat the stop loss that way, and in order to reduce the risk we have on the trade. And let me enlarge that panel in such a way we better see the trade here. I have missed the scaling here. I have not seen that we had a red. Do we have a red? Yeah, we have a red diamond. I have missed it, so I don't run after it. Okay. We can tighten furthermore the stop loss because we have the home base as the first level of resistance. We have the mid-tiger tunnel. We have the gray tiger tunnel. So I can tighten the stop loss just above the gray tiger tunnel here. And by tightening the stop loss above the gray tiger tunnel, the risk is reduced to minus 0.18%, so almost minus 0.2%, but with 68 pips as a potential profit. So no problem. So I have set to tighten to the gray tiger tunnel, so sorry here. And now we are locking some profit. See, we have a long bar in the movement, in the time bar chart, but because it was not the first long bar, the price is not moving too fast. Okay? Again, a missed scale in here. I should be more attentive. Tighten the stop loss. We have 1, 2, 3 level of resistance. We may have a divergence forming. So as soon as we have an exit setup bar, I will make an MX. Okay? And you can see here by the ESL result that we are in a profit, and a fast profit, almost 1%. And because I have taken a 1% risk, this means almost a 1R. One of the two scaling would have been a good one. So now we may have the divergence forming. So what I would consider is to define my level as soon as the bar has closed, where I would take my MX if the price follows through to the upside. Okay, so the open is here at 70, so at 71, 72. If the price follows through at that level, just above the tiger tunnel, I will make an MX. If the price resumes to the downside, most probably we will have a scaling opportunity, but in the context of that divergence, that scaling, I will skip it. I would like to take the MX. We still have ghost errors here with the Tala. This is why we have to correct some of these cosmetic errors. I can tighten further. You can see we can use also that pivot level as a guideline for our stop loss, but always keep your stop loss above the pivot level. And if the price hit the pivot level, it is not an XXX. If my ESL is above the pivot level and the price closes above the pivot level, then I would consider, if the price follows through, to make an XXX. This would be for me the equivalent of the movement invalidation in the time bar chart. No, the chart is not frozen. I was checking that possibility, but it is not the case. Again, a blue bar, possibility for an MX. So it has opened here, so at 75.96 here. Let's see. I have tightened further the stop loss. You can see that by tightening that stop loss now the profit on the stop loss is 1%. If I have a scale-in now here, of course I don't remember the initial stop loss. I can make a scale-in, and that scale-in will have approximately the same risk as my initial scale-in, my initial entry, because the stop loss was 23 pips. If I make a scale-in now, the stop loss will be 25 pips, so a risk a little larger than the initial entry. And so this will give me a global small risk on my global position. But with the first MX I will make, so let's make a scale-in here, because we had the setup bar and the price has to follow through. And you can see that now my global result is a small risk. But with the first MX I will make, we will lock some profit. Okay? So here at 67, half, 68. So if the price follows through here, I will make an MX. For those of you who have taken the Max Advanced course, you see a nice primo here to the downside, a short primo. We have 1, 2, 3 level of resistance with the mid-tiger tunnel, so I can tighten further my stop loss. And because we have 4 open units, you see that by tightening by just a few pips the stop loss by 8 pips, now we are again in a positive territory should the price hit the stop loss. But let's get ready to make an MX. Okay, MX. So I have made an MX here. Of course, for the MX with a short trade, we are executed on the ask price, so we have to add the spread. And you can see that the combination of the stop loss adjustment and the MX now has increased the lock profit to almost 1%. Okay? We are getting another scale-in. We can take that scale-in if the price follows through, where the open is here, so at 56.7, 2. Okay, scale-in. Increasing the risk, but you see that in the worst case scenario, the risk is, the loss is a very small one. So we had a divergence so here. We had a persisting divergence here. Okay. And now the price is following through. And I can tighten my stop loss further just above the next tiger tunnel here and reducing, and again in a positive territory. Okay, so now we have almost locked 1% with 2 scale-ins. I will take off the alert to you because there are some errors to correct, so I will delete them to not be disturbed by these ghost errors. So here we had another scaling opportunity, but the 15 pips rule was not matched, so out of question to take it, of course. Now we have another W which is forming, so another opportunity if we have the pattern formed to make another MX. And we can tighten further the stop loss on the second Tiger tunnel here, that way. So we would have 1, 2, 3 level of resistance, and we have a pretty large stop loss. Now, with that next scaling opportunity coming, and the store RSI making a sure W, this is a counter indication. I will not take that scaling. You see the difference between that pattern here in the store RSI, oops, and that pattern here, when I was telling that the store RSI was making a sure W. Or let's pay attention here. I have to make an MX. No, this was a setup bar. The price has not followed through, so no MX. In the first case, the strength was very important to the downside because we have an elongated M, which was not the case here. So we have here surely somewhere here. Oh, sorry. What I have moved the stop loss line, I think. No, my stop loss is here. I have, of course, this is the problem with the blue line. Let's do that way. Okay, nothing wrong. So no MX because the price is not following through, but now we have perhaps to consider a ratchet exit if the price comes. Okay, let's make an MX here. Okay, the MX is made and we are looking almost 3.5% profit. And on the present price, we would close almost 4.5%. Okay? Now, with these extreme long bars, I would hesitate to make further scalings here. 2 scalings is enough with these long red bars. And the price begins to stall. We have an extreme vignette which becomes to appear. And we have, in fact, if we consider the ETF on the sun chart as an independent way, yes, we have a TP here. This was the TP here, perhaps here, indeed, this one. And so if the price, the setup bar will be that blue bar, and if that, at the close of that blue bar, the price follow through, because we have an extended movement, we can consider to make an XXX AMAT. Okay, and this is important because this bottom was a bottom with at least one close outside the Bollinger Band. Okay, so the first TP has failed, the price has not followed through, and the second one, which is a little higher, may be a good one. So we need to wait for the bar to close, and then we need to see the price following through. Which is not a surprise because, as you can see in a time bar chart with this long bar, the price is posing on a Tiger tunnel, which is also a reason to not make a further scaling here. But it seems the outside extreme is above the inside extreme. So we have two scaling. This means we have 6 open units minus the 2 MX. We have 4 open units which are indicated. Why do we have 2 open units here? This is not correct. We should have 4 open units. No? Let's see in the terminal view. I know what is happening here. Euro US dollar. I will take off the alert here. Delete. Okay. Let's view in the terminal. View terminal. Yeah, we have 2 open units. Why? Was it by moving the line I have made on MX perhaps? I don't know. I don't know. Okay, that's not a problem. You can see the price does not follow through after the TP, and so the TP becomes invalid. But we have another divergence forming here, which has been formed, of course, here. At the close of that blue bar, the price does not follow through, so we can ignore it. We can tighten further our stop loss. 1, 2 level of resistance. The downtrend is resuming. We have in fact an ETF REMO. This REMO could be an additional scaling, but in the context of these long bars I would skip that scaling. We have already plenty of profits, so no need to take unnecessary risk. And we have furthermore, as you can see, potential external divergence forming. Let me check the trade which have been made in the terminal. I should have 4 open units. So let's see here in the account history. We have one sell, close. This is strange. This is strange. Have we identified another bug in the MTM? I hope no. That external divergence has become persistent divergence at the close of that blue bar, but the price for the moment doesn't follow through enough. If the price hit that my level here, I will make a further MX. Okay, MX. So we are left with 1 open unit. We have locked 4% profit, so a 4R profit. And it's not a surprise to see that the price again is stopping right on a tiger tunnel. We have a tiger tunnel rejection here on the time bar chart, which is very often the case with long bars. Yeah, but it's not impossible that I have pushed 2 times on the MX, because I have seen an entire trade being closed on the MX number 2, most probably. 2 units have been closed, most probably. This is a problem when we have still some errors, some small errors in one tool. We may be easily distracted by these errors. Okay, but we will examine in detail the trades in the history. Okay, after that. Clearly, the price is pausing now. We have two reversal bars in the time bar chart. So most probably another exit setup is preparing, in which case we will make an exit because we are left with only one unit. But closing that one unit with a 4.5% profit in a few minutes, that's a good trade. That's a good trade. And you can see that now the white line has changed its slope. The green line seems to change its slope too. And so this could be the preparation for perhaps a breakout move, a long breakout move. But the fundamental movement being clearly a down movement, so a very weak euro, I would not be tempted by the long trade. Let's take off that blue line here. This is not a divergence line because that bottom is higher than the previous bottom, but we have the violation of the non-lag, and so if the price follows through here, we can make another MX, which means here at 35 an XXX. You can take the discretionary decision to stay until the price breaks the pivot level here. But making an XXX is not bad here, so I will make the XXX. Okay? Okay, the XXX is made. And so you can see that if I display the global variables here, that the profit is, we don't need to display the global panel, not necessary. So we have closed a 4.3%. This means a 4.3 R with a 1% risk. Okay. Now, if we look carefully in the terminal, in the account history, we can check in detail what has happened. So we have opened the initial trade 2 times, so 2 units with 26 micro lot for each unit. The scaling, and indeed we have had one entire scaling being closed here. You see, this is scaling having been opened and then it has been closed. So I don't know. Perhaps I have pushed 2 times on the MX button at that moment. So this is a possibility. Okay. And so you see the profit. So $430, which corresponds indeed to 4.3%. The account is in dollar. Okay. Hold on, please. 1 second. It's not easy when you have a parent which is very demanding when she's sick. And you can see indeed that we have a third reversals bar in the time bar chart. So this bar is a setup, an exit setup bar. If the price follows through in the time bar chart, this would have been an opportunity to close the trade also. But we have anticipated that exit. Perhaps we may miss an additional down movement because the trend can still resume. But we have seen that the green line and the white line were changing their slope. And so this was a good opportunity to close the trade. But I would not take the long trade here. I would wait another opportunity to go short. Okay? Ahmad, no. When we push on the MX button, we always close one unit. And the rule is we always close the most profitable unit, but just one unit. But perhaps when I wanted to move the blue line, which is my reference to make my entries or my exit, I have perhaps moved I have perhaps made something else, closing 2 units. Okay? But anyway, you can see that even with that small little problem, the trade has been a good trade. A 4% profit is not bad. It's not bad. And this can be the trade of the day. Can you explain, says Peter again, your CRB setting and why you used what you did? I think you said you kept the same BC. What do you mean by BC? The same because you expected volatility from Draghi's speech. Yeah. So let me re-explain. Whenever we have, for the moment and for many months, a decision about the interest rates on the euro, followed by the press conference with Draghi, we may expect some volatility. And because I was expecting that volatility, which has happened, by the way, we can use, as I have explained in the course, we can use the smaller settings for the ETF lines. And so 13 instead of, so 8 instead of 13, okay? For the ETF lines, on both charts, the time bar chart and the SAM chart. Let me show you on the SAM chart here. You see 8 instead of 13. And of course 32 and 96 respectively for the white and the green line. In order to have a more reactive ETF lines, with more volatility, if we have more volatility in the price movement, the price will move faster than usual, and even the ETF line may be too late. So I prefer to use a smaller period to have them more reactive. And because of that volatility, I use also the normal range size. I don't divide the range size by 2 for the CRB chart, because when we have such a high volatility, the pullback may seem deeper pullback, and forcing us to make too many MX, and I don't like that. Okay? And so when I expect a too high volatility, in that specific circumstance, this is really a specific circumstance, like tomorrow with the non-farm payroll, I don't divide the size of the range bar by 2. Okay? So I tweak the period of the ETF lines, and I use the original size for the range bar. Is this clear, Peter? Okay, fine. Now, what we can do once a trade is closed with the MTM, you can either consider taking the next trade with the same risk, for example 1%, of course, or any risk you want, but with the initial balance, in which case you make nothing. Or you can capitalize your profit and change your balance to the new balance. And to do that, you have to reset the panel. And so you have to push on the RP reset panel button in order to set all these numbers to 0 in such a way that for the next trade, the account size which will be taken will be the new account size. So the original one plus the profit, in such a way that you grow the trade size with the compounding effect in the profit. Indeed, if you see in the terminal panel, you can see that the new balance is $10,430.17, so an increase by 4.3%. If you want to compound, then you reset the panel that way, and so the new balance will be the new balance taken into account by the MTM will be that new balance here. Okay. As you have observed during the trade, I have never ever paid attention to the profit, but always keeping an eye on the risk until the number here with the ESL result was green. Okay. These MTM tips are helpful. Are there any videos that demonstrate these buttons just like you did with RP? Yeah, there are videos, and I think Chris has already given some links with the package, I think. No? But they are easy. If you click on the CP panel, which is the control panel, you have in fact 4 fields. Okay, one which allows to show the global results when you have several trades simultaneously opened. And so let's suppose you have the panel for the euro-yen. The column on the right will show the result for the yen pair. But should you have another trade open on another pair, the global column here represents the total result with all the trades opened. Okay? And the on-chart risk profit table, if it is checked, this opens that panel here. If it is unchecked, that panel will close. Okay? So let's open that panel. And then you have on the third box the labels here. You can choose the long labels or short labels. Okay? And you can also anchor the panel to the chart. For example, if I click on anchor to MTM chart here, and I close, whenever I move the chart here, the panels will follow because they are anchored to the chart. Okay? So that's very easy. And the RP reset all the variables. MTM is superb in helping a trader focus on risk over profit, I think so. Yeah, indeed, Peter, indeed. And it's way, way, way easier than the old techniques I were using previously before having the MTM with my spreadsheet. My spreadsheet, my Excel spreadsheet, has exactly the same parameters in a little more detail, because in the Excel spreadsheet I keep every steps. Here the steps are marked on the chart. And in my Excel spreadsheet I have also a chart. I display in 2 charts how the ESL result evolve, how the expected profit evolve, and also when I trade on a time bar chart, which is less frequently now, almost never in fact, the result on the IZ line. And we don't have this chart for the moment, but in the future most probably we will have the chart showing the evolution of these results. Because it's nice also to see how having the numbers is fine, but seeing how these numbers evolve on a chart is superb too, and believe me, it's a good help on the psychological aspect, in fact. When the new version comes out, there will be a new interface, as Chris says, also with stop and reverse, auto screenshot on each trade, and ability to change risk percent when placing a new order. Yeah, indeed, because depending on the circumstances, you can change the risk per trade. If you feel more comfortable now, you are used to trade with a 2% risk, you can switch to a 2% risk. To do that for the moment, what you would have to do is to to edit in the properties of the expert advisor, to edit the properties and change the risk here to 2% instead of 1%. Okay? So do you have any questions about the way I have handled that trade? And you can see the statistics are meshed. I have said in the last workshop that under such kind of circumstances, either for central bank announcement or the non-farm payroll, in 50% of the case the movement is tradable, in 50% of the case the movement is not tradable. Last time it was the 50% of the case of not a tradable situation, and today it was a tradable situation. Now, should the price would have moved in a fast way when the opportunity was present here with that remo, of course, it would have been out of question to open the trade. Okay? Yeah, can I go over the scaling I have missed? Yeah, indeed, I have missed the scaling because I was distracted by the errors of that alert indicator. But here in this case, you can see that after the more entry, in this place here you have the MACD turning from blue to red. Let me draw a green line on that situation. So here, okay, on that candle, let's make a zoom in. We will see better what's happening. So here, the distance from a potential entry to the first entry here was large enough, 40 pips. So this would have been a good exit scaling setup. And then, so we have had the MX there, and then another scaling here. Okay. I have missed also. And the 15 pips rule here doesn't apply because we have made an MX previously. Okay. And after that, the next scaling here, that one here, I would not have considered to take it because we were at the extreme of that long bar here. Okay. Even the two previous ones, in fact, all the scalings I have taken were risky because we have many long bars in the price movement, but the momentum was nice. And when I see more than one long bars, I hesitate to take additional scalings. Okay. The movement has been a good movement, by the way. You see a movement of 120 pips, which is larger than or equal to the average daily range we have. Now, I don't say that the average daily range is a limit for the movement we can see, but after that, the odds are progressively against the movement. And in the specific context of a news release, we may have fast pullback, we may have fast reversal. So when I have a good profit, I prefer to take the good profit. When I have a good reason to exit, I exit. Okay. Now, should the MX be made correctly, instead of closing 2 units, 1 unit would have been closed. At the moment I have made my XXX here, I would have been left with 1 open unit, but you can see here that on the next bottom formation, given by either the non-lag violation or the bottom industrial RSI, the last unit would have been closed here. Okay, and so giving approximately the same result because the price level would have been the same than the XXX. So not a big deal. Is this okay? Other questions about that example? Now, because of that strong down movement, I would not consider to take a long trade, but on the contrary, if the price resume at some moment the down movement, because this is the fundamental movement, I may consider to take another short trade, but knowing that the potential profit or result on that additional short trade may be limited. okay, because the main movement has been made. And so as you have observed, no subjectivity, only applying the rules, okay? If I miss an entry for whatever the reason, I don't run after the price, I have missed that, okay? I have just recognized that I have missed that. And when I have a counter indication, I have explained in this case the counter indication here with the W for the next scale-in here, the long bars here, the price facing the Tiger tunnel. These are counter indications for any scale-ins to the downside. But these are not subjective rules. These are the rules of the MAX, as explained in the course. So we just apply them. Of course, we have to recognize them, which needs to be fast in the way to analyze a chart and to take the decision. Okay, and this requires practice. This requires practice. So would you continue trading New York at this point with stock exchange just opening? Wall Street has just opened 6 minutes ago, and you can see that we have the usual pullback for the Wall Street opened. After that, yes, we can consider to trade, and my bias, because of the circumstance on the yen, on the euro, would be to continue to trade the short size, except if we see other opportunities, or if you see other opportunities on other pairs, of course. But I have not studied in detail the news of today, because this news with the ECB was the big news. And unfortunately, tomorrow we have the non-farm payroll. So what I expect now is a slowdown in the market. And so with a 4% profit, or you know, 4% profit with that trade. But if you consider the opportunities after the London Open, okay, the London Open was here, a nice long trade, okay? On the Euro Yen and on the Euro USD, we had two nice trades, one long and now one short, okay? So this could be a day with a 5 to 10% profit with a 1% risk. Should you take a 2% risk, you would double your result. But in the context of such news, I would not advise you to take a 2% risk. 1% risk is well enough. You see, a fast trade, half an hour, 3/4 of an hour, 4% profit with just 1% risk, it's a nice result. It's a nice result. And how many pips? I have not counted the pips, but we have the entries here, and we can check on the statement, by the way. So I'm going to show you the statement, and you can check by yourself here. Can we display the profit here in pips? Let me see. No, it is in the, when the trade is open, we can display the profit in pips, but not in the statement. 170 pips. Yeah, I'm not surprised. I'm not surprised, because the movement from the entry here to the XXX was 73, 74 pips, and so it's not unusual to double or triple that result. So between 150 and 210 pips, yeah, 170, it's very, very plausible. Okay. So can we add here the profit? Can we add a column with the? I don't think so. No. No. But we can make the difference between the entry price here and the exit price. Okay. But around 170 pips, yes, it may be plausible indeed. And if you look at the statement, so let's say we are 2015 03 04 or 5, sorry. It will take some time to generate the report. Now, Peter, we will check in a moment the news on the CAD, because it is not because it is a red news that it is an important news. But if it is an important news, it will affect only the CAD pairs, okay? In case of a surprise. GoToMeeting is really taking a lot of resources, so it's so slow. And for the moment, I do not want to make these workshop on my new PC. Because my new PC is perfectly clean, and I'm organizing its content. Come on. Okay. Now we don't have the result in pips, only in dollars. So here, and we can see that here indeed there has been an open and a sell of our 2 units. Okay. Yeah, I do not want to contaminate my new PC, which is dedicated only to trade and to teach, with all these stuffs. Okay. Now, of course, when you achieve a level of mastering of the max and specifically the max sum, what you will see is you will see a nice growing balance curve, sometimes with some drawdown, of course, but the drawdown will always be small compared to the profit you can make. Now, don't expect every day to make a nice profit. Sometimes you will make a smaller profit, sometimes you will make a larger profit, sometimes you will make a huge profit. But you must have an equity or a balance curve growing regularly, consistently. It is not the importance of the profit which is important, in fact, but it is the consistency with which your balance account is growing. When you achieve that consistency with small drawdown, and you see that you get small drawdowns in the case of losing trade, if you control carefully your risk at any moment along the trade, never let the price a chance to get you with an important loss. I hate losses. I accept the losses, of course, because this is the rule of the game, but I hate losses. I am always hurt with losses. Once you get that consistency, you can achieve any financial ambitions or dreams you may have. It's just a question of times. Okay? Well, and if you make a 4%, let's make a small projection. If you are able to make a 4% profit with the max sum every day with one or several trades, okay, with a 1% risk, so it is a 4R result here. So 4%. How many days do you need to double your account? How many days do you need to double your account? You can apply, to go very quickly, if you compound, of course you can apply the rule of 72. You divide 72 by 4, the the average result you have every day. And so 72 divided by 4 is indeed 80 days, 18 days, okay, 18 days. So this means roughly 1 month. You can double your account every month by just taking a small risk, 1%, okay?